Hello, everyone, and welcome back to this episode of our 10-minute CFO call. Today, I'm going to welcome back Brennan Roney, who's been with us on various calls. How are you, Brennan?
Doing fantastic. Thanks, Keith.
As I've shared with everything before, I've been able to work with Brennan the last 3 years, and I've always been very, very impressed with not only his skill set, but it's his knowledge and his abilities that he has. And so it's a lot of fun to be able to talk with Brennan. Today we're going to be able to have a good time because, one of the questions that's most frequently asked a lot of times to the people in accounting and finance is simply this: what is my break-even spot? And those are very important questions because if a company's launching a new product, they want to know how much their sales need to be or possibly looking at the company as a whole. But with all of that, I'm going to turn the time to Brennan, who can now teach us a lot more and how to compute the break even, because this is a very important part of your daily activities. So, Brennan, with that, I'm going to turn the time to you, sir.
Yeah, absolutely. Thanks, Keith. Like you said, break even is critical to understanding. It feels extremely complicated, but in reality, it's actually not as complicated as it feels. It's a very simple formula that helps us understand where we need to get to based off of our current costs and current situations to make sure that we are making enough money to cover what we're spending. So I'm gonna go ahead and share a screen here with you, Keith, and we'll take a look at this. This is a demo company inside of one of the accounting platforms that we like to use called Zero. And this is a typical profit and loss statement that we might see from one of any business that we work with. You're going to have, your standard income revenue lines that come in. We're going to have our standard cost of goods sold. We end up with a gross profit number that says, hey, we have this much money from our normal day-to-day selling um, activities. And then we'll end up with our operating expenses that says, hey, what does it cost us to actually run the business on a month over month basis? So when we're looking at a break even standpoint and trying to understand what is it then our actual break even in a situation like this, the official formula, just so you're aware, is basically your fixed costs divided by your contribution margin. Also, a lot of people look at it as a gross margin is very commonly used as well. So gross margin effectively is taking our contribution or gross profit number here and dividing it into our total sales. Basically, it is telling us how much money do we get to utilize from each dollar sold? How much of that, what percentage of that we get to utilize to help cover our day-to-day operational costs, also known as fixed costs. So we like to look at overhead or operating expenses as our fixed cost number. So when we're looking at this situation here, we're saying our gross profit is $23,066 off of a sales of 25,406. When we do the formula of taking the two and dividing it together, we end up with, and I'll show you this break-even graph over here that kind of breaks this down. This is this contribution margin here. Let me make this a little bit bigger, sorry. Basically, this number divided by the amount is 90%. This is a phenomenal and really, really good contribution margin or gross margin. We would all love to see that, and I hope every one of you has those type of margins, but that might not be the case. But either way, basically we have a 90% margins. Then what we do is we want to take the fixed costs. In this situation, the operational cost to run the business during this time frame was 38,394. So we would take this 38,394, divide it by that contribution margin of 90%, which would then give us our break-even number. So when we come over here back to this graph, this has all been calculated out and formulated to basically say our break-even is that exact formula I talked about here. It's the fixed cost divided by that contribution margin. So in this situation, their break-even cost number will be 42,289. So basically, we're saying in order to break even, just make just enough money to keep the business alive and not have to spend any additional cash or resources to the business, we would need to do 42,289. I then like to put together these nice little graphs to try to help visualize a break-even analysis. So I put this together to say, okay, obviously, if we did zero revenue, we didn't sell anything, but we were running our business and our fixed costs were fixed, truly fixed. I know fixed costs are never really truly fixed, but we have to start with a number, right? So we take that 38,394 that we had there previously, and no matter what, whether we have zero sales or we have a ton of sales, we're still going to spend this 38,394. So therefore, that's the very, very minimum in which we're always going to spend if we had zero revenue. Then we get to our break even number that says, hey, when we divide those two with our every dollar that we're spending or that we're selling, we're getting 90 cents effectively to be able to help cover our operational costs, which is great. Fantastic. So that 42,000 that we just came up with the break even then says when we get to 42,000, our cost, total cost, which is our fixed cost plus those variable costs, are going to be 42,289. Therefore, we very specifically come to exactly zero net income in this situation. Then I like to look at say, what if we did double? Let's say we doubled that revenue and we did twice as much revenue from break even. So that means $84,579 was our total revenue. You can see that our variable costs are only 46,185 because we have such a great margin. Therefore, the difference between these two is our total net income. It ends up becoming a really great, very, very profitable business with regard to this. So it kind of gives us a quick visual layout of what we need to do in order to break even and get to a place where we feel like, hey, we're doing really, really well. So if we come back to this example of looking at this demo company, right? They sold 25,000. They did 2,300 in total cost of goods sold, but they still spent 38,394, which means they technically have a loss of $15,000. So if we come back and look at the graph around this 25,000 mark, I know it's not officially on here, but as we look, hey, $25,000 in revenue, which is this bottom line here, you can see that we end up in a negative loss situation. The difference between we're in this negative, everything below this line is a loss in the income statement during that year. So it very much makes sense. So this is critical in just really understanding and helping people to understand where do I need to get to? What's my goal? Let's get to break even. That's always number one, especially with new companies when we're looking at it. You're always trying to figure out what do I need to sell? What do I need to get to so I can at least break even? Number one key goal, break even point. Once we get to break even, then it's all about what can we do to make additional profit? What can we do to make more money, get to a higher net income, and start really ramping up the business into a better place? So that's really how break even is calculated. Hopefully that makes sense. If it doesn't, please, reach out, let us know. We're more than happy to talk over more and helping you understand your business even more with regard to how you can make your business profitable.
Brennan, thank you very much. A lot of times I'll have questions at the end, but this time I don't. You've done an incredibly great job of teaching and showing us how to calculate our break even, and then after we do, how profitable we can become. So thank you very much for your time today, and thanks for all of you for joining on. If you have any questions or if you'd like to talk more with Brennan or with me, please feel free to reach out to us. We'll be more than happy to help you. So with that, again, thanks for joining us today, Brennan, and thanks to all of you. Have a wonderful day, a wonderful week ahead. And with that, goodbye for today.